Most buyers scrolling Zillow right now think the Carolinas real estate market is taking a breather. But if you are waiting for a price drop on a finished home, you are looking at the wrong inventory entirely. Investors are currently monitoring zoning petitions, road expansion calendars, and commercial permits. These specific indicators, what we call phantom data, allow institutional money to move into position, while retail buyers are still focused on last month's median home prices. This table shows the exact difference in how retail buyers and strategic investors measure the 2026 market. On the left, spectators are obsessing over median price, days on market, and the year a house was built. On the right, investors are acting on pocket listing volume, infrastructure completion calendars, and rezoning potential. You can't use a single strategy across the Carolinas right now. The state has fractured into radically different micromarkets. Buying an older mountain cabin requires a completely different playbook than picking up a teardown in a Charlotte suburb. If you try to force one set of rules across the board, you will overpay. Waiting for a property to sit for 90 days so you can negotiate a price cut means you are buying a mature asset at a premium. You are sitting in the stands watching the transaction happen, rather than securing the specific equity gains that occur before a property ever reaches the open market. Now, let's look at Cornelius and Huntersville. The mainstream focus is on the general lake inventory or completed mixed-use areas like Birkdale. The real money is focused on the dirt surrounding the Gilead Road widening and the upcoming Farrelltown Parkway extension. This line graph illustrates what happens to local real estate during major road projects. Notice the red shaded area. We call this the pain gap. Property values artificially depress while the road is torn up. But look what happens at this vertical line marking project completion. The equity resets and shoots upward. Right now, land values along the Walden subdivision corridor in Huntersville and the Gilead impact zone in Cornelius are sitting squarely in this dip. You can secure these properties at a 15 to 20% discount compared to established neighborhoods nearby. But capturing that discount requires a specific tolerance. You have to lock up your capital and physically endure months of heavy traffic, orange barrels, and construction noise right outside your door. This means you cannot treat this as a short-term flip. You must hold the asset firmly until the road project is finished and the final asphalt is poured. In these specific zip codes, you are buying the future pavement. The jump in equity you get when the road opens is your direct compensation for putting up with the temporary lifestyle friction. If we move down into the Charlotte metro, physical condition means even less. Forget about how many bedrooms a house has, or whether the kitchen has been updated. Under the Charlotte UDO, a dilapidated house on a half-acre lot is valued by its capacity for density. The land's worth now scales based on the 3 or 4 multifamily units it can support, regardless of the single-family home. The strategy is filing specific rezoning petitions, moving from an N1A to an N1C or D designation. If that lot sits within a half-mile radius of the Blue Line Transit, changing that zoning forces a massive reappraisal of the dirt itself. The friction here is high. The structure is a complete teardown. Executing this requires active capital, a reliable construction team, and patience to navigate Charlotte's city bureaucracy for approvals. If you are looking for a move-in-ready primary residence, this will drain your resources. This is strictly an active developer's play. Inside Charlotte's 2040 policy map zones, the physical walls and roof are functionally worthless. The local zoning designation is the only true asset you are buying. Next, let's examine the luxury core of Davidson. Public real estate platforms currently show price growth has flattened out at 0.7%, but those figures only capture a fraction of what is actually happening on the ground. Our data shows an 18% dark transaction rate in the 28036 zip code. These are premium homes trading quietly between neighbors and country club members before they are ever typed into a public database, rendering the 81-day active listing average largely irrelevant. Heading west to Asheville, a new barrier has emerged: the insurance wall. On the left, older cabins in high-risk zones face tripled premiums, making them unmortgageable. On the right, modern, slope-certified builds maintain stable, flat insurance costs. Instead of fighting Asheville's tight short-term rental bans and insurance traps, capital is migrating to Woodfin. The completion of the Whitewater Wave project is creating a pocket of high-appreciation land, free from regulatory headaches. Succeeding in Davidson or the Western Mountains means bypassing the standard public inventory entirely. You either need the elite social access to intercept a private sale or the foresight to deliberately sidestep geographic regulatory red zones. There is no universal best market in the Carolinas right now. Your capital has to be deployed based on the exact type of friction you are willing to tolerate. This flowchart maps 3 distinct paths. With active capital, you belong in Charlotte's UDO transit zones. For a passive hold, align with the Huntersville pain gap and wait for completion calendars. For climate mitigation or premium access, target Woodfin safe zones or Davidson's off-market networks. Applying the wrong strategy to the wrong micromarket guarantees locked capital and minimal returns. You can't force a passive strategy in an active developer zone. Ultimately, this comes down to a strict trade-off between convenience and positioning. If you prioritize a move-in ready home and base your decisions on lagging indicators like days on market, you are locking in a low ceiling for your return on investment. The 2026 real estate landscape does not reward patience. It only rewards positioning yourself ahead of the data. Stop acting like a spectator reacting to yesterday's weather. Start deploying your capital based on tomorrow's government calendars, infrastructure changes, and zoning codes.